Okay, so when it comes to assets, the third number, what the lender's going to look at is they're going to ask for like 2 months worth of bank statement. It's kind of like standard. What they're going to look at is one, if you have enough for the down payment, if you have enough for the closing costs. You're going to want to check your cash flow to make sure the cash flow is whatever your pay stubs say it is, or you're self-employed that you have, like whatever the taxes say it is. You're going to want to make sure that there's no unexplained expenses. So, for example, one big mistake that a lot of people do is sometimes they save a lot of money in the couch and then they put it in the bank right before they buy a house. But if we can't explain where the money comes from, then the lender's immediately going to assume that it's a loan. And they're going to ask, well, if it's a loan, if there's a $10,000 cash deposit, just to name an example, they're going to ask, well, where's the money coming from? And if we can't prove where the money comes from because it came from couch money, they're gonna they're gonna immediately, like, it's gonna cause a problem because we can't prove where that money comes from. And the lenders immediately, like I said, it's going to assume that there's a loan, so they're going to ask for a note. They're going to ask for, like, what's the interest on this loan, what's the monthly payment on this loan, how long is it going to, what's the term on this loan. So it's a big, big problem. So when lenders ask for statements, that's what they're looking for. They're looking for anything that might show that the borrower is borrowing money, which you can't, at least not without declaring how much the payment for that money is going to be. Okay. So something important to consider is that different borrowers have different situations, but most people qualify from either like a 3% down to a 5% down. And that's just a down payment. So that's equity that you're not going to owe on the house when you pay that money down. Now, there's also what's called closing costs. Closing costs are the cost of the transaction. So a closing costs include the cost of, for example, the appraisal, title fees, the survey, what the city charges to register the house in your name, and what we call escrows. So, all in all, closing costs typically add anywhere from 3 to 4% of the value of the loan. Now, that's just a rough number, okay? And it's going to depend on every situation. Because most importantly, something that people don't know is that closing costs are negotiable between the seller and the buyer. So, like a borrower, like you can literally go to sell and say, you know what, I'm willing to offer this amount of price, but I want you to pay for the closing cost. Now, do we advise that? Not in all circumstances. This is why. In a tight market where there's more borrowers, there's more buyers than there are sellers, and this is right now in the late 2023. This is a tight market. The seller's pretty much going to go with whichever offer to make the most amount of money. So if you're asking the seller to pay for all of the closing costs, and the seller has 10 other offers on the table, and all the other offers, like the buyers, are uh, saying that they're going to pay for the closing costs, well, seller's pretty much going to go with whichever offer to make the most amount of money. So that's what's very, very important to make sure that we're ready when you're putting in that offer. Now, there are what's called first-time home buyers programs. First-time home buyers programs are actually a form of down payment assistance. And the two big institutions in Texas that do that are TSHEC and TDHCA. Now, those programs are done via your lender, in this case, me. And the way that they work is we have to meet the minimum qualifications for those programs. So the first minimum qualification that it is, in like just in very general terms, is you have to be a first-time home buyer. First-time buyer is defined by somebody that hasn't owned a home and has been on the title of a home in the last 3 years. So if you bought a house back in 2010, sold it in 2015, and you haven't owned a home since then, you would technically qualify as a first-time home buyer. Now, if you're a first-time home buyer, and there's some down payment assistance for people that are not first-time home buyers, but like the terms are not as generous. If you're a first-time home buyer, and the minimum credit score for those two programs is 620 versus a 580 for an FHA, if and there's also going to be, so you have to be a first-time home buyer, minimum FICO of 620. Your income cannot be higher than a certain amount, and the certain amount that amount is defined by the state, and they give out these maps, so that if you live in certain counties, the max would be, let's say, 100K, versus other counties the max would be like 60K or 80K, something like that. So it's super important that we talk about this, because if you're going to need extra money, and down payment assistance comes in forms of two, three, four, or five. and depends on their availability. That availability changes every day. We have to make sure that you'll be able to qualify for that, so that you have enough money for cash to close. Okay. So all in all, there's a lot of options for people, and the most important thing is you talk to your lender or me, you know, and figure out where you're at, so we can figure out how to get you there. And it's super super important to disclose everything that you can. Lenders, we're like your financial priests. We cannot share your information with anybody else, and it's better to know everything up front, so that we're not surprised by something at closing where like, oh wait, you have this extra house over here that we didn't know anything about, now we need to take that payment into account. That's It's happened. Let's not do that. But the whole gist of this is, it's a process. Very few people qualify right off the bat. It's okay to talk to me as soon as like maybe a year beforehand or anything like that, so that you have time to prepare for when you actually need to buy in a home. Okay. So once again, this is Oscar Acosta, your trusted mortgage expert, and I'm here to answer your questions. Have a good day.